Hi, I'm Mpomoletsani from Sasfin Asset Consulting. The second half of 2023 began with concerns from investors around the slowing global economy, the possibility of a US recession, as well as the ongoing tightening of monetary policies from central banks. However, in July, the IMF raised their global growth forecast in April from 2.8% to 3%, with a warning that a risk to global growth remained tilted downwards. Factors such as high inflation, potential supply shortages in the oil market, the intensification of the Ukraine conflict, as well as extreme weather conditions, could have a huge effect on the global economy. Despite worries in the US, the economy showed resilience with a strong jobs market and robust consumer spending, resulting in a 2.4% GDP growth in the second quarter of 2023. There was a close call, however, with the federal government shutdown and Fitch Ratings downgrading the US government debt from AAA to AA+ in August due to concerns about governance standards. The US Federal Reserve paused its interest rate hikes in July and September due to slowing inflation. Jerome Powell, the Federal Reserve Governor, hinted at a possible rate hike towards the end of 2023. And central banks in the UK and Europe were also approaching the end of the interest rate cycle. Meanwhile, China faced challenges in achieving economic growth despite stimulus efforts. Global equity markets that had a strong start in 2023, driven by the AI theme, faced headwinds in the third quarter due to rising oil prices and tighter monetary policies. The MSCI World Index gave back some of its earlier gains, ending the quarter around 8% higher for the year in US dollars, while US Treasury yields reached multi-decade highs.
Hi, I am Bongiwe Momoza. I am a senior asset consultant at Sasfin Asset Consulting. Despite challenges such as load shedding, the South African economy recorded a 0.6% growth in the second quarter of 2023. The fluctuating energy supply continues to weigh on business confidence and the rand, resulting in the local economy performing far below its growth potential. However, the greater involvement from the private sector, the progress on transforming Eskom into different business units, as well as the additional electricity generation capacity that will be coming online in 2024, is expected to reduce the impact of load shedding. The South African Reserve Bank kept interest rates steady but warned that load shedding could deduct 2% from economic growth in 2023. CPI inflation declined within the 3 to 6% target range of the South African Reserve Bank to 4.7% in July, but later rose to 4.8% in August. CPI inflation is expected to move above the 5% level, causing the Reserve Bank to remain hawkish in its monetary policy stance and possibly holding interest rates higher for much longer. At its latest Monetary Policy Committee meeting, the South African Reserve Bank revised its headline inflation forecast lower to 5.9% for 2023. The South African rand experienced volatility, reaching an all-time low of 19 rand 91 cents to the dollar before gaining some ground to reach 18 rand 90 cents to the dollar. The South African rand remains under pressure due to various factors such as a strong US dollar, reduced investor sentiment, as well as strained South African finances, but has since been on a continuous decline to reach its lowest level in September, thus closing the year to date down 1%. The various sectors showed mixed performance, with the industrials delivering 8% for the year to the end of September, and the resources down 18% over the same period. During the third quarter, the local bond market remained under pressure due to a weaker rand and negative foreign investor sentiment relating to inflation, political, and fiscal concerns. This resulted in the bond market ending September flat relative to where it started in 2023 from a return perspective. Local property remains the worst performing local asset class, declining by 6% for the year to the end of September 2023. From a regulatory perspective, clarity emerged on aspects concerning the two-component retirement system set to be implemented 1st March 2024. Some finer detail remains to be finalized, such as the seeding amount allowed from the vested component. Sasfin Asset Consulting is investigating the potential impact on the default life stage strategies of the various clients from a liquidity perspective. We will also be assisting our clients in educating fund members on the implications of the system once it is implemented. As we move into the final quarter of 2023, there seems to be more certainty around the global and local economic growth expectations. The inflation trajectory will determine how soon central banks will consider possible interest rate cuts in 2024. Markets will discount the central bank views long before the decisions are made, and the language used by central bankers at the remaining Monetary Policy Committee meetings for 2023 will be important for managing investor expectations. Over the next few weeks, major focus will be on the medium-term budget in South Africa that the Minister of Finance will deliver on 1st November 2023. The market will focus on the growing fiscal challenges facing South Africa leading up to the national government elections in 2024. While some areas of the global investment markets look less expensive than a few months ago, opportunities still exist in the local equity and bond markets. The rand still has room to recover, barring a negative outcome from the medium-term budget, and any further pressure on the oil prices, which could affect the inflation outlook, and a risk-off environment caused by global developments.